Okay, hello guys. Good morning from here, 5 a.m. Alright, so I'm going to teach you guys something. Because I know some has been wondering how I do some analysis and take some trades. So I talked about two trade setup, and that is VIX51S. The before right here, and then the after right here, and then currently we see it right here going to the target. So the next one is step index. Okay, so that is the two pairs that we share today on synthetic indices. Step index. Alright, so this is the step index right here. So this is the entry and the prediction, and this is the higher time frame, and you can see price tapped right there, the entry, and then we see it drawn to the point of interest. So let's quickly dive into our MT5, and we start off with VIX150s. All right, so normally we always start from the higher time frame, and we are following the higher time frame trend, right? But there are some cases where I see some structure, and I feel like it seems like I'm going against the whole trend, and that is fine. But I will explain to you the things that I see that would kind of like make me want to take those entries. So right here on the daily time frame, so I won't go to the monthly time frame. We look from the daily time frame first, because the monthly time frame is packed in, like it's compressed. So there are some cases where you hardly see structure on the higher time frame, but the monthly time frame shows a strong bearish market, right? So if we run down to the weekly time frame, what I'm trying to spot now is the area of a swing high and a swing low. So it seems like the weekly time frame showed it to me, but not too clear. So I'm going to do something right now on my settings. I will go to color, and I'll go to grid. So you can learn the settings also. I'll just show you. So if you click on grid and I click on black, then I go to I go to show and remove the show grid, and yeah, my screen is blank. But then if you notice, I cannot scroll this downward. So due to the fact that I set my grid to black, you see this stuff up here, it displayed. So I could just shift it down. The line is meant to divide it equal parts, so your chart is now at the equal of your screen. Now if you want to do this like trading view, just like I'm scrolling this, like this, you can go click on F8, or you go to properties and you go to common, just activate your scale fix. Okay, because if I off the scale fix now, I cannot be able to move my MT5. You see how I just do this, and you see it doesn't expand. But when I go to property and I put on my scale fix, I can expand this as long as I can. So yeah, I know most of us don't know that, but yeah, I just showed you. So that's what I do. So but the problem is if you expand too much, you find it difficult to look for what you want to look for. So you have to go back and deactivate it and activate it again. So now this is the weekly time frame, and the areas that we spot is the nearest highs and lows where we're having the buy stop and the sell stop. All right, so that would be the range at which I will be dealing with, right? So You see what I just told you? So what I'm going to do is go back, click on here, remove it, and put it back again. All right, so can I go down to the daily time frame, and right here I have my settings. Get it up, bring it up, bring it up. All right, so like this is now the long-term range that I'm dealing with. Now there's something I want you guys to understand, and that is when it comes to price being drawn to an area of liquidity by stop, sell stop, stuff like that. So I want you to know this, like when you go to your chart and it seems like you're having like the market wanting to print a ranging market. So if you spot a high and a low, all right, so this is the first swing highs and lows, like the swing highs and lows that the algorithm will want to deal with. So in this case, it will want to print what an area that it needs to deal with to build up that ranging market. You understand? So whenever I notice that a swing low has been printed and price is now creating a failure to go below that low, that is when we anticipate that the market wants to shift, and the next thing is to look for an area of inefficiency that price would like to trade into, then use that to be drawn to the swing high. All right, so when that swing high is being taken out, then if it wants to retrace backwards, I'm looking also for the structural shift or a failed movement. Then I will be targeting that previous swing low that price traded out from. So that is how the algorithm will wanting to print a ranging market. We have to be drawn to a high, drawn to be low, to the low, and we bring about support and resistance. So that is what I am seeing right here. So this is high, this is a low. All right, so this is a long-term structure. Okay, so if I use a Fibonacci to mark this discount or premium, this is it right here. So for this long term, I could possibly be targeting this 50%, this equilibrium for price to trade into, because most of the time price reacts from equilibrium or the 61.8 Fibonacci level. Then if it breaks that, then I will know that I will be drawn to a premium price. Now that is it for a long-term buyers. Now the short-term buyers that I have now is this low and then this high. That is the range that I'm dealing with. All right, so from there we can still mark out the equilibrium, and if you watch closely, price reacted from the equilibrium, but it created a failure to do what? Push the price lower. That is one of the reasons why I'll be anticipating to look for a buy. Now, not because it just tapped and I start looking for buy. It is also because when it tapped and traded lower, it did not break a structure. Okay, so with the failure of breaking the structure after reacting from equilibrium, tells me that I'll be buying at the discount to push the price higher. All right, so this range high and this range low, that is what I'll be dealing with. If you look at the Fibonacci, it tapped into the discount to start buying. So now that is what we're looking at. Now another thing that I paid attention into was seeing an area of inefficiency. Did price balance inefficiency and trade out of it? Did it break structure? Did it fail to break structure? These are the things that I considered. All right, so now saying that, so my entry was the 4 hour. All right, so VIX150s is no more volatile as it used to be. So the stop loss, I think the entry was here, the stop loss below here, I think 0.1 lot is $11. 0.01 I think is $11. that was risked. So now I think it's raining now. So if I also look from the forward time frame, I notice that price has been filling up inefficiency while selling lower. So this was filled, this traded backwards, filled this inefficiency, came back again, it traded lower, came back, filled in consequent equivalent like 50%, trade backwards, filled its own side right here, trade backwards, came back to the fair value gap, filled it up, then it now traded lower and reacted off of a old block or a demand zone, which is this one. And most of us, we say we have a stop hunt, though I didn't pay attention to what happened right here. All right, my attention was seeing that price did not break a structure and traded upwards, leaving behind this inefficiency. So some will say that we had that stop hunt and this structural break. Then another thing that we had was this liquidity assessment. All right, so me seeing that price tapped into this demand zone and pushed higher made me look at the fair value gap that we had and anticipate that price should buy from that point. Okay, so if I go to the higher time frame, we can still see it very clean and clear. If I go to the 6 hour, you will see that I know most of us will mark this as a structural break to confirm that price tapped the demand zone and broke a supply zone. So it's like a confirmation entry to enter to confirm that this demand zone is valid, so we can possibly enter a trade targeting this area of liquidity. If I go to 8 hour time frame, that right there is a fair value gap, an 8 hour area of inefficiency. All right, then this up close candle before the sales is a supply zone that got violated, so it's likely gonna be used as a mitigation block or breaker block. I don't know, I don't trade that, but that is how it looks like. But the confluence was that it traded into this fair value gap. As long as I see this inefficiency, that tells me price should react from there, because there is no other area of sell side inefficiency that price would like to react from. So this one got violated and price to trade higher to give us what? Liquidity for on the bar side. So since price traded into the 50%, showed a rejection, then I'm targeting premium, targeting that high. Okay, so when price should trade backwards into the inefficiency, I'm expecting to look for buy to target the buy stop. So price should go and sweep that high. Then if it decides to trace backwards, I don't know that. We have to see it, take it, and show a shift just like it did right here. Otherwise, we like to see it to trade up to this 50% from the higher time frame range. All right, so that is it for 150 areas. Now step index, this step index I used a analysis, which is buying below opening price. That's what I did. So for step index, okay, what I saw right here, the main interest that I have actually was this high and this low. Now I consider this has a stop hunt. All right, I don't see that as a break or structure. If you pay attention to this one, also you can see the price reacted off from the 50% of the swing range of highs and low. Now it traded into the 50%, and what did it do? It traded lower to discount, right? So when it traded lower to discount, it did the hunt. That was what I considered right there. So I don't see this as a break or structure or what, a hunt. So now we have an internal liquidity given to us, right? So this is an internal liquidity right here, and then we have an external liquidity using an external high resting on this high. Since an external low has been swept and purged, then I'm looking to target an internal liquidity. Now also looking at the weekly time frame, I'm also paying attention to areas where we have inefficiency that got balanced. So the only inefficiency we had was this one, in which that was at the range of the equilibrium that price traded into. It balanced it, and then it traded lower. Now if you pay attention on how this stepping index was selling from this point, it was selling and also filling up sell side inefficiency. Now when it traded into this buy side inefficiency with sell orders to mitigate and equalize the supply and demand, like the buy and the sell side, it was also balancing the sell side. It did not leave inefficiency. So until it continued there to do a take out the sell stop resting on that low. So after that, then the next thing I had to do was to target the next range high, this high. Then if we could possibly retrace backwards, I see a structure, then I would like to anticipate it to go take the withdrawn to premium price. So now I'm gonna delete all of this. So now you can quickly go down to the daily time frame. Now when the week opened, that was on Monday. If you check this is 1st of July. All right, that was when the week opened. So that was why if you look at it, if you look at what I shared on Facebook, I indicated something like a clock right here. So that clock is the time, which is the opening price. So we have that right here. Now apart from that, I also indicated that we have a sweep on sell side liquidity pool. So remember what I talked about, area of support having stop loss below, and that stop loss is identified as what? By sell order. So as someone that is smart, you will, if you're looking for an asset to buy, you're expecting to see someone who's willing to sell, right? Now price was trading lower in a choppy way, filling up every area of sell side inefficiency, right? You see it trade backwards, filled up this one, trade downwards, created support, and then we finally trade lower to take out that liquidity. So this is the price where the price opened, right? So if I'm anticipating, like I said, I was to teach about the candlestick theory. If I'm anticipating to buy for a week, I would like the candlestick to open for that week. I won't trade on Monday. Then if it trades lower and I'm expecting to buy, I would like Tuesday to possibly hunt Monday's low, or fail to hunt Monday's low and then break structure. So when that happens on Tuesday, structural shift occurred, then I'm looking to buy, right? And when I'm looking to buy, I'm anticipating for it to trade above the opening price, and then we close bullish for the week. So after a high is given, we should close right there. So that is how the anticipation is. All right, so that is what happened right here. We swept, it opened Monday, we traded bearish, so you're anticipating that it's bearish, right? But if you look closely, it is choppy, and at this point from here to here, you know, the market ain't clean. So we traded support, and that was on Tuesday, right? Then Wednesday, right, swept that low, and it gave us a clean confirmation entry, which is stop hunt plus what, a change of character, a market structural shift. Delete this one. So we have a structural shift, and after that we have an order block. So we mark the week right there has an area of, those are trade supply and demand. So mark this week has an area of entry. So seeing that I have inefficiency, buy side inefficiency, no other sell side inefficiency that price should trade into, the only place we have inefficiency was this area, and I anticipated the price should trade into it because it also broke a structure after a stop hunt to look for buy. Right there, we find this 3 hour. This is the 3 hour order block. So the anticipation, since the structure it traded lower and gave a structural shift, we should anticipate it to trade above the opening price, which is this high right here. So that was what the market did. After trading bearish, it shifted bullish, and you know the deal. Target areas of high. So we have this buy stop, we have this buy stop also. For trade line, it is a sell side and buy side liquidity pool. So some choose to mark from week, some choose to mark bodies. So me, I would prefer marking the bodies instead of wicks, because that is where the volume of trading is. Alright, so that is just how it is, and that is just how it is. So now we are, after taking buy stop, we are now looking at area to see a reaction from sell side inefficiency, because the price will always tend to react at area of inefficiency, even if it's just a little. Okay, even if it has to break this inefficiency, it should just react from it and then break the inefficiency. So just watching to see how it goes, because that is an area to pay attention into for a confirmation, because you know overall trend says it's bearish, right? So yeah guys, so I hope that this analysis is going to help you know how you analyze the market, look for entries and stuff like that when you get to your chart. So yeah guys, take care and be safe. So you know the deal. So the range now that I'll be dealing with on this step index will just be this high and this low. So if you look very closely, this area of 50%, if I go down to the lower time frame, you will see that it is that supply zone that I marked on the 6-hour time frame, right? Isn't that concerning? Right, so let me go to the 8 hours so you see clearly. You see that it is that area that I marked. So why is an old block at the equilibrium price? It is there for price to react, even if it's just a little bit. Okay, even if it's just for a while. Okay, so that is it guys. So take care and be safe.